Hello, traders. Sorry about the late start here this morning. It's 8:05 a.m. Chicago time on the 13th of January, 2021. The first thing I want to know is, am I coming across too loud? If so, please let me know. This is episode number 1916, and I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. I'm at the office, starting out from the office today. I had to be on a show early at 7 a.m., so I had a little bit of a struggle getting things going here. Apologize for being late. Let's dive right into the Convergent Trading summary, pre-market summary sheet this morning. Markets are risk off this morning as we trade. We're seeing a slump or a turn down across the indices. The S&P is down about 8 points as of this pre-market sheet. Again, this was done about 15 minutes ago. Allocation is to safety. We're seeing money coming into gold, and the treasuries, the 10-year note and the 30-year bond are up. The Eurobond is up, and again, money moving out of indices into treasuries. The interesting thing to note here, we do see a pop in gold, and crude continues to hold its day-to-day trend up. Crude keeps testing the prior day's point of control and pushing higher. In what is a firm uptrend, crude is likely to continue higher and come back into its long-term point of control, which is around $66 or so. That's the expectation. Not that I'm a long-term trader, but that's how things are shaping up right now. So that's where we stand. Coming into today, we have 175,000 contracts. I'll revise that as I go through the review portion. The overnight inventory, you can see, is quite balanced, 2.4% to the long side. Pretty balanced inventory, 28.5 points, multi-distribution profile. Market is actively seeking price, seeking equilibrium, and that's what we're coming into the session with. This pulls us into an expectation. My news feed is too loud. This pulls us into an expectation that we would likely see some pretty decent price discovery on the open. This is probably an open that you would want to be ready for and might see setups right off the get-go. So this is the kind of situation that we want to be prepared to potentially take action and not wait out the first 15 minutes or whatever, the chop. So that's where we stand. We still remain in the prior day's range, but as you can see, we put in a lower high in the overnight session. 182,000 contracts have traded in the S&P, and we are remaining below the full session mid and VWAP and below the prior point of control. However, the MC point of control is still in play here in the S&P. So that's where we stand. As far as the what's ahead, we have Fed's Bullard at 9:30 today. We did get ECB's president speaking earlier after ECB's President Lagarde. Before the industrial production numbers came out of Europe, which came out pretty strong. They were expecting 0.2% for industrial production month on month and got 2.5%. And they were expecting negative 3.3 year on year, and they got negative 0.6. Pretty strong numbers there. The inflation rate came out in the U.S. at 1.4%. Consensus is 1.3. The core came in at 1.6 in line. And that's what we've got. Crude oil inventories at 10:30. Fed's Brainerd at 1. Fed's Harker at 2, and Fed's Clarita at 3. It's Fed parade week, I guess. And then a 30-year bond action at 1 as well. And then the monthly budget statement, which isn't really a mover most of the time. and that's where it stands. This evening, we do get balance of trade out of China, as well as exports and imports. So look out for that if you are trading. Those come out at 9 p.m. Central, 10 p.m. Eastern. So if you have open positions, not sure if there will be a surprise there or not. So let's move on to what was expected yesterday. So yesterday, more of the same as the prior days we talked about. You kind of saw the same scenarios both Monday and Tuesday. And the scenario yesterday was looking for a break of 75. So we're looking to move to 75, consolidate briefly, break through, and potentially push as far down as 57. And if we do get some acceleration down, why was I looking for acceleration down? Because I was looking for all of this volume here. So here's the full session volume, full session volume, full session volume. I was looking for that all of the volume above that it has formed an MC point of control at 37.95 to finally spill over, and I was looking for it to potentially extend down. And that area, the key area to test below, is 37.30.75, 37.30.75. But I'd like to take things one level at a time. So I was looking for a chop at 75 before it gives up and starts to move towards 57 as a primary scenario after testing higher on the open. I was looking for a test just above 3,800 to the overnight point of control at 3802. 3802 has been in play a fair amount. Here's what actually happened yesterday. We had an open auction on the open right against the prior day's point of control, right against the MC point of control. So we're coming in. This is why we do the homework overnight. We're coming in knowing that the market is opening right on top of the MC point of control, yesterday's value area, and so on. So we expect chop. It moves down and tests the 81.50, just two ticks above the prior day's low. And we get the snapback right back into the opening swing, and then we finally break higher into the 3,800. Remember, yesterday it was looking for a push into 3802, a breakdown, consolidation at 75. That's that stock zone right there. And then potential break and consolidation, a break into 57 below, right? That's what I showed you here. Push into 3802, roll over, tests the 75, and then starts to work its way down into 57. No idea where it'll turn. I'm not here to tell you that I'm an oracle and I can read price or that I'm right, but that's basically what happened. We tested, pulled back to VWAP almost the mid, and then retested, and then started to impulse down. Let me switch this to a 4-tick Renko so we can see the rotations a little bit better. Renko keeps the rotations very clean. So you can see here, these are the rotations down at the bottom pane, and you can see that we suddenly crossed this red line, which is the impulse line. We crossed the red line, so we expect a pullback and we expect a continuation. So we go from 13.75 down to 11.5, and then we do another 4.75, 5-point pullback for a 12.5 point. So now we expect, because we keep breaching this impulse line, we're creating impulse after impulse, so we expect it to continue. And now you're seeing the signs in these rotations. Look at these rotations. You're starting to see the signs in how it's slowing down. It's not impulsing anymore. Although there's some distance to the target at 57 down here, it's starting to slow down. And so that forms the pullback. We're looking for a pullback to the prior low. So 81, 81.50 is a key area. We're looking for a pullback to 81, 81.50. And then we're looking for to retest. We do have higher lows starting to form here, but still we're pushing up against a key area that was tested and retested. Let's pull back a little bit. You can see that this area here played quite a bit in the prior session, basically a double bottom. And then it was retested again. So I would expect some sort of battle in this 81.50 area, but it's one of those things where if it's what this was right in here is a clear risk reward opportunity to get short. Although it didn't work, it did provide a scale out. It gives us a very clear indication whether or not the market agrees. And in this case, the market did not agree with an impulse pullback to a key area, continuation or higher low, which is what I expected. Another attempt, another stab at the 37.70 area, 68 area with a higher low, and then back above if that's what it wants to do. However, with this kind of trade, we know that if we're back inside of the prior day's range, which happens to be the IB low, it's really a 1.5 type of risk for about a 6 or 7 point return. That is a pretty good stab. That's a pretty good stab to take. If it doesn't work out, it doesn't. If it does, it pays off many other stops that have occurred or will occur in the future. So in this case, the market started to grind up, but pulled back to RTH mid, pulled back to RTH VWAP, and then continued to squeeze. And what we ended up with yesterday is a P-shaped profile, and what is normally a clear indication that the market has rejected these lower prices. What we have basically is a V bottom, which is essentially an excess low. However, it was also capped by the 3,800, which has been the cap for the last couple of days, and it's really struggling to finish above 3,800, and so we have to take that into account. The fact is the market is balanced, and the expectation is it's likely to spill more and more to the downside. So carry that into this session, and what we have is RTH high, lower high, higher low, right, versus the prior session. Lower high, higher low. And then what we did yesterday is we put in a lower high, lower low. This here triggers one-time framing down. This is the beginning of one-time framing down, in my opinion, and this starts to set things off. Now remember, we've come up here and we've done nothing but coil for the last 3-4 days. So we came up here on Thursday, was it Friday? And we've been sitting in this range for quite some time now. And the anticipation was Monday likely to be choppy. The Tuesday, usually a higher volatility day, likely to break. And so I was looking for a break lower on Tuesday, which happened, but we did it in a way that creates this excess low. And then we finished higher. And overnight, we test this high again, just like we did yesterday. We test above 3,800. You can see us here testing and testing. And then it finally fell off. And we're in this key area right now. We have a double distribution profile overnight. And we are testing the VWAP, the full session VWAP, mid and low volume node area. This is really an important area here in the 37.93-ish, 92-ish, 93-ish is a very important area for sellers to defend, for the market to start moving lower. So as we come into, we're 10 minutes from the open. As we come into the open, I'm expecting some pretty decent action on the open. That's the conclusion there. We've traded 188,000 contracts, which is getting close to what we would expect for the session. And we have had an impulse down with delta playing along with the impulse down. So the delta is accompanying price. To me, this looks like a pretty decent setup right at the open. And so it's important to be attentive as we come into it. Okay. Any questions? Well, guess what? I can't take your questions because there's like a 15-second delay and we'd all just be sitting here. So that's where we stand. Let's take a look at, let me just take a break for a second and remind everyone that tomorrow at 1 p.m. Eastern, 12 Central U.S. time, there's a public webinar about trading right. What does it take to trade right? I really believe that many traders have a lot of information. It's hard to sift through this information to put together what their approach is, what our plan is going to be for the year. And it's really, there's a drive from me and Convergent Trading as well as EdgeClear to have traders push through, get organized for the year, and get things done. So tomorrow at 12 Central, 1 Eastern, you can join me. I'll be presenting what all the pieces that it takes to trade right. You can go to ct.pro/trade right, and you can register and join us. Trade right, all lowercase. Okay. The link is also available in the description of this YouTube broadcast. You'll see it also on my Twitter feed. You can follow me at twitter.com/futurestrader71. So that's where we stand this morning. And then let's switch gears and go into, when I hit you with another animation for EdgeClear, if it plays. Thank you. Let's take a look at what's expected for today. Okay. Let me set that chart up here. And that's where we stand. Boop. All right. So here we are. What are we expecting this morning? This morning, again, we're pushing against a crucial area. This is the point of control. Wrong color. Got to get it right. We have volume point of control, right? Last 2 days turns into a low volume node. So what we have here is rejection of that acceptance area. This is also the MC point of control, as you can see here. It's the MC point of control. And the market is and then we have VWAP and full session VWAP mid. We're coming into this area. I'm expecting us to, with the overall overnight inventory being balanced, I'm expecting this to open, test up. I'm looking for rejection down. Although the risk reward here is very clear, I'm looking for rejection down, a test into this 75, 74, 75, a struggle, and then I'm looking for it to again spill, move into 61.50, 61.50, and then potentially 57 before the bounce. This gives us plenty of range for the day. Again, I'm playing the short side. I'm looking for what what areas we're likely to get caught up in, and what areas I can initiate trades in, and that's what I'm looking for here. I'll wait for the break lower. If I can read the chop in here and see that lifting is not getting anywhere, and there are people hitting the bid, in other words, delta dropping, people lifting are being confronted with icebergs or something in that 92, 93 area, this is crucial, then I'm looking to get short for a rotation down, back down to the 81.50, 81 area, expecting some support there. That's where we are here, 81. And then look for 75 to be support, 61, and then on, and then the next is 57, 47 down here, 47 in French, 47. That's the main scenario. The secondary scenario is a head fake. We've been seeing a lot of whipsaws, so we're going to look for a push down very early, consolidates down here in the 81, impulses through, the 95 area and starts to squeeze again towards the overnight point of control and the 3800, and squeezing and pushing the size that has accumulated to the downside and squeezing those shorts. As soon as we breach 380506, shorts are in serious trouble, and we are starting to move into the 3811, 3817, and so on and so forth. So I'm looking for a break away from here, and we are primed for this. We have volume that has been stacking here. We have a consolidation. We have a coil, and I'm looking for it to break away from here. I've been looking for this for the last 2 days, but every day it doesn't do so. It's really priming to do so again. So the goal here is not to forecast what the market is doing. Well, the goal here is to be prepared if it does break. If we get a choppy day, then I'm not going to see any setups and it becomes another boring trading day. Good luck, and I'll catch you tomorrow. Take care.